antitrust law brought together 10 law firms from around the world to work out the legal and human rights issues surrounding self-testing.
The problem is very simple. The problem is that 30 years into the epidemic, in this region, between 25 and 50% of people only know their status. We can either spend another 25 years banging our heads in the same way or come up with something game-changing, and we think self-testing could be game-changing.
At no point had we ever thought that we could have an opportunity to work with 10 legal firms from across the globe.
Especially in a country like South Africa, given our past, we actually have a moral responsibility to contribute towards the upliftment of society and supporting the communities from which we come.
Antama ya kulu jira igele naga siye yeneje jeno kama bayana yandi almanaga antama macha tetere kama weje nako changa kanga ta hiaga de nyokane anende ya wana go dara gad wa nyokana loida kada thwaka ko ba ko nga hedi ngo chala randa.
This course is actually a real story where we've got people coming over from countries that are having elections in the next few months or year, from developing countries, maybe emerging democracies, where people come here to cover the British election.
Which policy is the strongest one of your party?
I think that we now have more people in work in this country than ever before.
What do you think of these new migrants?
When we came in this country, we were immigrants, but we was working. We never depend on the government for anything.
If we are in this room today, it's because we really want to work together to identify solutions to empower women worldwide.
Sex trafficking is, at heart, a business. The financial institutions are in a unique position to provide help because they have the data that is so useful for us in terms of proving the cases that we need.
When a woman says, I don't know anything about money, I'm afraid of money, I don't want to create trouble for my family, always remember this is not her voice. It is the voice of the history which made her.
No problem in the world is seen and addressed in isolation. May it be global warming, may it be terrorism, may it be poverty, and so is the problem of slavery. We have to work hand in hand as a global family.
Thank you. Thomson Reuters Foundation is the charitable arm of one of the world's most trusted global news providers, Thomson Reuters. TRF stands for Free, Independent Journalism, Human Rights, Women's Empowerment, and the Rule of Law. TRF exposes corruption, the human impact of climate change, and plays a leading role in the global fight against human trafficking and slavery. Sunil Goel and Associates, Chartered Accountants, India, founded by the managing partner Mr. Sunil Goel in the year 1980, is in the fourth decade of its operation. It is also a founding member of the Leading Edge Alliance, enabling it to have over 2,000 expert affiliates in over 106 countries. SGA has been providing a wide array of services to NGOs, both local as well as international, for the last several years in the areas of taxation, assurance, compliance, and also towards accounting support. SGA has not only helped them on the entry strategy into India, but also in obtaining various registrations, permissions, and exemptions under various laws. There's Foreign Exchange Management Act 1999, Foreign Contribution Act 2010, Income Tax Act 1961, and the Trust Society laws, depending upon the applicability to each individual case. Today's presenter, FCA Sunil Goel, is the Senior Manager of SGA, who supervises the firm's assurance practice and litigation services. At the age of 22, he achieved his accountancy degree with distinction from the American Institute of Certified Public Accountants. Besides the degree of Chartered Accountancy from the Institute of Chartered Accountants of India, he has spoken at and addressed NGOs at several forums in the past. Now, we understand that our audience may or may not be fully versed with the financial terms and concepts, which is why we have kept the job on to bare minimum. However, shall you still have any query, please please feel free to type it in the chat box, which you should be able to see in the bottom left corner of the screen. We shall be taking a query session towards the end of the webinar. Over to you, Mr. Slayer.
Good afternoon and welcome to this webinar jointly hosted by the Thomson Reuters Foundation and Sunil Goen Associates Chartered Accountants. At the outset, greetings on the occasion of Mahashivratri to all the audience members. Before we proceed, can you confirm that you can hear me loud and clear? We haven't started the presentation. This is only the introductory slide. As in when we start the presentation, we shall let you know. But if you can confirm that you can hear me and financial compliance for NGOs webinar introductory slide is visible to you. Okay, great. So I think a fair majority of you can hear me. I'm going to now start sliding over the various slides of this presentation. The objective with which we approached Thomson Reuters for conducting this joint webinar was to introduce the various ways for setting up of NGOs to a lot of you who may not already have formal structures in place. In addition to those who already have these structures, in the whole myriad of the various compliances and reporting requirements which are prevalent under the plethora of acts in India, it is impossible to keep on check of the knowledge of these and the various timelines. We wanted to just touch upon a few of the compliances in this short window of about 45 minutes in which we shall be presenting. We should also touch upon the recent amendments in the Foreign Contribution and Regulation Act, known as FCRA. And then we should also touch upon the Finance Bill 2017 or the Union Budget, which was presented by the Honorable Finance Minister very, very recently. And another hot topic of debate, which is Lokpal and Lok Ayuktas Act, the relaxations which have been brought about for the compliances which were obligatory by 31st December under the provisions. To run you through the agenda of our presentation, these would be the various topics that we would be covering. We're going to start straight away going into the impact of the Union Budget on the non-profit sector as prevalent in India. There have been a few changes which you may have otherwise overlooked while reviewing the more widely publicized amendments under the Union Budget. The first and one of the most important amendments is to restrict the cyclical application of monies by non-profit institutions in order to avoid a never-ending process of applying money, thereafter donating it to another sister or to another NGO, and this whole cycle used to be continued for a never-ending period. The government felt that it was now obligatory for such NGOs which were receiving monies towards the corpus not to be allowed to transfer this to another NGO, and therefore in future, which is from the assessment year beginning 1st of April 2018, that is assessment year 2018-19, any such application of money which was originally received as a corpus donation shall not be treated as an application of money by the income tax authorities in the case of that NGO. Similar such amendment has also been brought about in clause 23C or section 10 and various other subclauses of the respective entities which also will be following these guidelines. There was also a lot of confusion about the fact that when registrations of certain organizations were being reviewed or potentially being cancelled by the Charity Commission, which would be the Commissioner of Income Tax or the Director of Income Tax Exemptions in the metro cities, there used to be a lot of debate about the fact whether organizations who were originally registered under Section 12A with certain specified objectives, and since then, if they've gone ahead and changed their objectives, whether this qualifies as a topic which can potentially have their registration cancelled. There was never any guidelines on any clarity on how to go about it and whether it was mandatory. Now the government has gone ahead and clarified this situation, wherein it says any institution which has been granted registration under 12AA, whether it has gone ahead and done any changes in its objects or not, it needs to review this position before 31st of March 2017. This would be a precursor to the fact that in case you have actually gone ahead and changed any objects, you would be obliged to obtain fresh registration by making a new application within a period of 30 days from the date of such adoption of changes or modifications in the prescribed form and manner. In essence, it would basically mean that you have about 1 month to review any difference in the objects for which you would have sought registration initially as compared to what you would have had now, reconcile this, and in future after 1st of April 2017, you would be obliged to file a fresh registration whenever there is any change from the original objects for which you were registered. There was another clarificatory amendment which has been brought about in the Income Tax Act. There used to be a confusion about the due date of filing of returns for institutes or organizations registered under Section 12AA. It has been expressly clarified now that all such entities are required to file their return within the time allowed under Section 139 of the Income Tax Act. In cases of all entities where the total income without giving effect to the exemption exceeds the maximum amount which is not chargeable to income tax. Again, this is applicable from assessment year 2018-19 and onwards. Please excuse the minor typographical error on this slide. The whole cash donation issue has been subject to a lot of upheaval in the recent past, both from a point of view of Section 80G as well as the political parties exemptions which were being debated very fiercely in the parliament recently. This has all been as a precursor to the demonetization in PAT in order to further streamline the sort of loopholes which are available to organizations and to political parties where donations up to rupees 20,000 be accepted in modes otherwise than by cash, and in case of Section 80G of donations up to rupees 10,000, both these limits under 80G and also for political parties stand reduced to rupees 2,000 unless otherwise paid by cash, and also further details of the donors are required to be kept with the respective entities. We're just going to quickly touch upon, for the benefit of those who may not already have formal entities in place, there is a concept in India which is loosely termed as an NGO or a non-profit organization, an NPO. To formalize this structure, there are 3 different options which are available. You could either incorporate yourself as a trust or as a society or as a Section 8 company, where trust being the most loosely organized entity, while the Section 8 company is obliged to follow various guidelines under the Companies Act 2013. For the benefit of all, we've tried to tabulate a few of the comparisons. We will not go into too much detail of this, simply because the fact that we assume a lot of you have already taken decisions very carefully thought after, depending on whether you want to be a trust, society, or a Section 8 company. However, in case you still like to explore this, the comparative table would be available to you after the end of this presentation when we send this out formally to you. There has been a lot of debate about this concept of hybrid structures. In recent years, there has been a remarkable increase in the number of organizations that combine profit seeking with an altruistic or a social mission. We normally broadly term these class of entities as hybrid organization, though there are a variety of other terms that have been used, including mixed mission, blended value, triple bottom line, and creative capitalism. In particular, much attention as well as legislative activity has focused on a broad but vaguely defined group of hybrid organizations, which are commonly referred to as social enterprises. Common examples of social enterprises include microfinance institutions that provide credit to low-income borrowers, businesses that sell fair trade products, and companies that sell affordable products in developing countries. This pursuit of a mixed commercial and social mission is not exclusively the domain of a small set of specialized firms, and in fact, a large number of multinational corporations, Starbucks, JP Morgan, and various other domestic enterprises are actively engaged in corporate social responsibility initiatives. There is a growing popular belief that combining profit and social mission is an effective way of producing social wealth. However, despite these wide-ranging developments, hybrid organizations remain poorly understood. As a result, in India, legal policy in this field is fairly haphazard and largely ineffective. There is some amount of uncertainty about the extent to which business planners have the power to form businesses that combine profit and social missions. Having said that, we do have seen several examples of enterprises which are following this kind of a structure in India. An example of this would be the People Tree Ventures Private Limited, which is based out of India, which trains rural youth in various construction and infrastructure related skills and has found a way for rural youths to get out of poverty. The company also provides placement to train manpower to various infrastructure industries in India, thereby creating an end-to-end sustainable business model. Another example of this is a social enterprise called the Milap Social Ventures Private Limited, based out of Bangalore and headquartered in Singapore. They are a mission-driven company changing the way people fund and impact communities in need. Every day, these organizations connect hundreds of hardworking borrowers looking to start a small business, pay for education, install better facilities in households, and various other objects for which they form. The only purpose for us to share these examples with you would be that this is a concept which is developing in India. There does not seem to be a lot of clarity as of right now how the government would view such structures. There is a lot of commonality in the board of directors and the shareholders at times. However, as long as you keep the two entities legally, factually separate and independent, the common shareholding should not trouble you in first of the authorities. Again, before you act upon any such hybrid structure, we strongly recommend and advise that you seek proper professional opinion to make sure that in a structure which is being created, the substance over form does indicate that the two entities are doing independent work and the objects for the two entities for the overall good might be synchronized, but there is no mixing of funds or there is no transfer of monies from one entity to the other. Moving on to one of the most keenly debated and probably the most not properly understood topic, which is the SCRA 2010. There has been a lot of gray area on the application under the FCRA for registration, prior permission, and very recently on account of the new government's dispensation to be quite rigid in terms of their stand to non-profit organizations receiving foreign grants. We've noticed that this is a topic which requires a lot of careful deliberation and a lot of professional advice as well as understanding both within the organization as well as the consultants who you're approaching to file applications for either registrations. The various ways in which you can bring foreign contribution to India is either you seek a prior permission or you go in for a blanket registration. This chart would list out the various steps or the various prerequisites. We will touch upon these in the next 2 slides, but this should give you an overall summary of the process under which you need to subject yourself, whether you should be eligible as an entity requiring prior permission or an entity which should apply for registration, presuming it has the requisites. In case you're going in for a registration under the FCRA, the prerequisites for you should be that either you're a registered society or a registered trust or a Section 8 of company as prescribed under the Companies Act 2013. Normally, you should have been in existence for at least 3 years, which means you should be in a position to file at least 3 audited balance sheets. You should have also spent at least 10 lakh rupees over the last 3 years on your core activities besides the administrative expense that you may have done. When you file an application for registration, besides filling in the requisite forms, you are also obliged to file a detail of the activities carried on by you during the last 3 years and the activities for which you would be utilizing the monies in future. It is also very important that you keep in mind that if you've got registration, you should not in any circumstances transfer fund to other organizations who are not registered under FCRA without seeking the proper permissions from the Ministry of Home Affairs. You should also not intermingle domestic fund with foreign contributions. I'm sure there will be a lot of questions on this topic, and we've tried to cover this in the FAQs at the end of our presentation. But just to clarify, what we are trying to suggest is that any monies that you received for a project which needs to be done under the foreign contribution umbrella, you should not use those monies for a project which is not under the FC umbrella, and vice versa. In case you're not in a position to comply with the requisites of registration, you could also go ahead and apply for a prior permission. A prior permission is basically a case-to-case application which is specific to the donor, specific to the amount, and specific also to the project for which you are seeking a permission from the MHA. You should again be registered as one of the 3 entities. You should have a specific commitment letter from the donor indicating the amount of foreign contribution and the purpose for which you would need this monies for. Once you've completed the project, you also are required normally to submit a project plan as well as some sort of reporting which will summarize the purposes for which the monies have been utilized. Under each of these situations, whether you have a registration or prior permission, you are obliged to file annual returns with the MHA. Renewal of registration has again been a topic, has been subject to a lot of discussion, a lot of chatter formally and informally in the last 1 year or so. To give you a background, the FCRA 2010 was made applicable from 2011, and all organizations which had registration under the erstwhile FCRA 1976 were allowed to continue their registration for a period of 5 years. And therefore, all organizations in the beginning, or rather the first quarter of financial year 2016-17, were obliged to seek registration in case they were registered under the erstwhile 1976 Act. In all likelihood, you should have already applied for registration. The due dates have far been exceeded. Normally, just for reference, you should have applied for a registration certificate. You should have applied for a copy of the original registration and the charter documents, and these needed to have been filed online. However, we've noticed that either due to oversight or lack of proper filing of the registry or the renewal applications, or in situations where you may not have addressed the queries which have been received from the MHA after the filing of the renewal application, the MHA put out a list on their website in which registrations of more than 11,000 associations were provisionally cancelled and were deemed to have ceased with effect from 1st of November 2016. However, the MHA has sort of opened a small window for those organizations which had a genuine reason, which they either filed a response or the response was not properly addressed, and these association can still file or review their status up to 28th of February, provided sufficient reasons are demonstrated to the satisfaction of the MHA why they could not file their application for renewal in time. You can go ahead and check your current status on the website of the MHA. This would be mentioned in on their status once you log in with your registration number and some basic credentials. You would be in a position to understand what is the status of your application as of date. Now quickly just moving on to the various amendments which have been brought about under the new foreign contribution regulation rules. These provisions supersede these contained under the erstwhile Act and also the original FCRA 2010, which was implemented with effect from 2011. A majority of these amendments are with a view to streamline the process of filing of documents. I'm sure all of you have experienced at some stage a difficulty in posting your annual returns to the MHA centralized office in New Delhi because there was no other authority to which you could file your returns or file your application. In order to digitize and to make this process a lot streamer, a lot of these amendments would basically indicate that you're now required to file the application for registration, prior permission or renewals in online form, as well as online uploading an image of your signature and stamp, so that the process of application and renewals gets a lot more smooth. This specific amendment does require a little bit of discussion. In the past, a lot of organizations were in violation of the disclosure requirements. Moving forward, in case you have a registration or prior permission, then you are obliged to place your audited accounts on an official website of the central government, which will be the FCRA website or your own organization's website. In addition, any person receiving foreign contribution in any quarter is also required to disclose the details within 15 days from the end of the quarter. To give you an example, for all grants received from overseas up to 31st of December, you were obliged to place this in public domain by 15th of January, similarly 15th of April, and henceforth in the remaining quarters of the year as well. Another important fact that you must keep in mind is to regularly intimate to the MHA any changes in your name, address, aims or objects for which you were originally registered, the FCRA designated bank account, as well as the key members, the chief functionaries. There has been a lot of oversight on this account, which has led to cancellation of registration, as well as when your accounts are audited at the year end by a chartered accountant, these changes tend to be overlooked. You are obliged to report this in Form SC6 within 15 days. Again, this needs to be done online. We're also wanting to touch upon another important legislation for organizations which are registered within the state of Maharashtra and to a limited extent those having applicability in the state of Gujarat. Under the MPT Act, there are certain guidelines for reporting which are coming up very soon. You are obliged to file a budget in case your annual income exceeds 5,000 or 10,000 under the respective situations. This budget needs to be filed in the form Schedule 7A. This needs to be filed by the 28th of February 2017. Also, you are obliged to maintain your accounts, which means the balance sheet, the income and expenditure account in certain prescribed schedules, being Schedule 8 and Schedule 9 respectively. This is applicable, as I mentioned, to certain kinds of non-profit organizations. However, a lot of oversight is also unfortunately kept when the accounts are being prepared, or most likely while carrying out audits, we see that the budgets have not been filed within time. Lokpal and Lok Ayuktas Act, as you may recall, was promulgated with the whole Anna Hazare movement. This came through with a lot of fanfare. There was a lot of debate in both houses of parliament a few years back. The Lokpal Act in principle has been implemented as is in place. However, for reasons best known to the houses of parliament, the teeth which this act should have ideally had, that kind of force has still not been given. There were various discussions about reporting requirements, but those also seem to have been diluted at this stage. Ideally, this act applies to all public side. They include any person who has been a director, manager, secretary, or any other officer of every society or association of persons or trust, whether registered under any law for the time being or forced in not. Additionally, if the organization is in receipt of foreign contributions in excess of rupees 10 lakhs in a year, then you are also obliged to file certain disclosures in the public domain. These disclosure requirements are in respect of the personal assets and liabilities of the immediate members, and in certain circumstances, even the spouse is required to file a return which needs to disclose the various assets and the sources from which these assets would have been derived by the respective person. Although the MHA had prescribed that the disclosures needed to have been made by the 31st of December through a memorandum in July of 2016. However, due to lack of clarity and for other reasons which are being deliberated by the government, in a very recent office memorandum of December 2016, it says that there is no current requirement for filing the declaration of assets and liabilities by the public servants as of now. However, this does not mean that this requirement has been completely dispensed with, and we would know fairly soon what would be the next steps in this direction. We've also tried to very quickly capture some high-level compliance and caution areas and certain reporting timelines in the ambit of income tax. We are obviously not going into details of the audit and various other reporting requirements as prescribed under the tax authorities. However, just high-level discussions which are relevant to keep in mind are being touched upon. There is a distinction between any monies that your organization might be receiving towards corpus, donations with a specific written direction from the donor that these should be treated as part of the corpus of the trust are not included in the total income of the trust for that respective year. However, proper disclosures of the same need to be done while filing your income tax returns. Also, I'm sure you're aware that you get income tax registration only when a prescribed amount of money has been spent by your organization during the said year, which means at least 85% of the total income, which means amounts received excluding those towards the corpus, have been utilized during the period. Any balance beyond 85% is already deemed to be applied towards the objects of the association for that year. Having said that, in case you are unable to receive the money during the said year, or you are unable to apply it you do have an option to file an application to the income tax officer within the due date as prescribed, seeking extension for the next few years in which you can apply these monies. Another important definition amendment that has been brought about in the past is for those organizations which are sort of having objects which are carrying out activities incidental to the main objects, which means if you have a business activity which is being done in addition to your main activity which is charitable in nature, as long as the activity is incidental to your main object and is not in excess of 20% of your total receipts, you would still be deemed to be a charitable organization and your registration would continue. To give an example, in case you're running a school and you let out the auditorium of the school for certain hours in a week or certain hours in a month, and as long as the total receipts from the rent of this auditorium does not exceed 20%, you would still continue to get the requisite exemptions. This is the schedule which is prescribed under the Income Tax Act, under which you need to disgorge the bifurcation of your total monies towards corpus, towards voluntary contribution. And also another important point to be kept in mind is that even for foreign contributions, you are now obliged to keep this distinction. As we touched upon in a couple of earlier slides, you do have an option to keep your surplus income invested into certain prescribed modes. This surplus income is allowed to earn certain non-speculative incomes, and these are the various modes under which you can continue to keep your monies invested. Whenever you are keeping the surplus monies, make sure that you are following the guidelines mentioned here, which is section 11 subsection 5 of the Income Tax Act. Any monies which are invested outside these prescribed modes are subject to non-compliance and potentially may result in cancellation of your registration, or for that matter, not getting you the requisite exemptions. We also wanted to very quickly touch upon a few of the compliance matters and certain internal controls which you should as an organization keep. These internal controls assist you to have a sustainable structure, and also when you go ahead and represent yourself before prospective donors, the strength of your internal structures would allow you to market yourself and get larger sum of monies as grants. We strongly believe that it is very essential for a non-profit organization to also have a very strong internal control, just like another entity which is operating for a for-profit objective. You need to have various operational, compliance and financial reporting controls, each with an objective to ensure that your resources are being effectively and efficiently being deployed. You are in compliance with the applicable rules. Normally, we've seen that organizations which are small in scale, the focus tends to be more on the activities rather than complying with the various statutes they are subjected to. This may be at times okay in terms of their immediate view. However, in terms of the long-term growth as well as the compliance guidelines, it is very important for you to keep a strong compliance structure in place from the date from which you start your operation. Similarly, it is essential that you have a very sound financial reporting structure. You must ensure that your financial reporting is done timely. You do get regular reports from your fund managers, from the people at the ground, and also ensure that the quality of your financial reporting is sound. We have seen while carrying out several audits in the past that the financial reports may be in place. However, the quality of the reporting is fairly unsatisfactory. The quality of the underlying vouchers is something which does not give confidence to any external auditor who comes and does a pre-fund audit whenever you are approaching large grant giving agencies. Again, the controls need to be brought about in the RER framework, as we call, which is the receipt, expenditure, and the reporting. Whenever you receive any money, you should make sure that you correctly tag it to the correct donor, and you also have the ability to keep a track of what money was received from what donor and for what particular project that money has been utilized. This needs to be done with a view to ensure that you do not overspend any of the monies received by you. Also, while you're carrying out any expenditure, you must have proper records and guidelines for procuring, delivering, disbursing, and accounting the expenses that you would have done. We recommend that you do consider various online ways of tracking expenditure and expense management. We do understand that for organizations which have operation in multiple cities, in multiple states of the country, at times it becomes inconvenient to wait for project reports to be submitted at the end of the period. There are various softwares which are available now, which allow you the ability to track expense management online. Finally, it is very essential that you have a strong reporting structure of giving the information back to the donors, as well as to various other stakeholders who would be benefited based on the projects that you would have utilized the monies for. And also, this gives them the confidence that the reporting structure is transparent, and also there is a variance analysis between what you were supposed to spend the monies for and for which you actually ended up spending the money. We're pretty much now moving towards the end of the presentation before we open up the forum for questions. We did take the liberty to address few of the questions which had been received while you had registered for the webinar, as well as a couple of other questions which we felt were relevant. We did receive a query where it was questioned whether advisors who are not on the board of an organization are covered by the Lokpal Act. The definition states that it includes any person who has either been a director, manager, secretary, or other officer of every society, and therefore the character of the advisor, whether he is an internal officer or he is an outside consultant, would determine whether he is obliged to comply with Lokpal guidelines. Another question which we touched upon in the beginning, which is again an absolute prohibition by the Act, is the intermingling of funds between the domestic and the FCRA accounts. You should, in all circumstances, make sure that both the monies are independently kept in different accounts. We normally go ahead and even advise our clients to open separate utilization accounts under the parent FCRA designated account. Each utilization account would be towards each independent project under the FC umbrella, and therefore there is a clear distinction and there is no utilization of monies between two projects or between the FC and non-FC projects. Although the next question is strictly not in the ambit of a non-profit organization, but we still decided to take up this topic of equalization levy, which was introduced by the Finance Act 2016. An equalization levy was brought about to bring a level playing field for those organizations which are having their headquarters outside India, typically Facebook, LinkedIn, Google AdWords. The concept being that in case you're making any payments to such organization for digital ads, you are obliged to pay an equalization levy of 6% from your own side. This equalization levy would normally not be applicable if the aggregate payments made during the year is less than ₹1 lakh, and also for those organizations which have registered themselves in Jammu and Kashmir. This was another topic which was picked about in compliance with labor laws. As per section 32 subsection B subclause C, as per the Payment of Bonus Act, any employee who is registered under an institution, which means in hospitals, chambers of commerce, social welfare institution, and established not for purposes of profit, would not be covered under the statutory statutory bonus clause. However, we strongly advise that all labor law compliances may be vetted independently to be fact specific to your case. Another question is about the ATG permanence. In the past, ATG certificates were required to be renewed every 5 years. However, with effect from 2009, all those approvals granted for ATG are now permanent in nature and do not require any sort of renewal. Then another question which we got was, is it necessary for a registered NGO not having undertaking any activity to file the requisite tax and the required forms? Although this is an issue which is not clear, because the registered NGO could be a trust society or a Section 8 company. Each of these entities have their own reporting requirements of filing the return. In a more general sense, we do normally advise all our clients to continue to file their returns even if there is no clear activity. It allows you to be compliant and make sure that in future, whenever you apply for any other registrations under different acts or statutes, you do have a clean track record and a clean slate. I think this was broadly the topics that we thought we could cover in about 45 minutes. We do have a few questions which we've received during the chat presentation. As of now, my colleague, she would possibly take about 5 to 7 questions in the next 15 minutes that we have the ability to address. We would try and address these questions based on the limited facts that we have. However, we would also like to disclaim that it is essential that you seek proper advice and guidance which are specific to your facts, and you disclose proper background of your organizations before acting on any of our suggestions. Over to my colleague Shruti. Thank you.
Thank you, Suhail. It was very insightful. Let us pick up the first question, which comes from Shalaka. Would there be any implication for us if the finance bill is saying that one NGO is giving grant to another NGO is not possible?
There would possibly be still some sort of an issue in this. Normally, the corpus donations shall not be treated as application of money. However, we're still waiting the final approval of the Finance Bill 2017. This would be possibly subject to a lot of feedback and changes. And normally we notice that the budget gets approval in the Parliament by April or May, and we must wait to see how this clause is finally represented in the Finance Act 2017.
Okay, thank you. Next question is from Achintya Rai. Do these hybrid structures, especially the private limited company, come under the purview of Foreign Contribution Regulation Act?
Absolutely, Achint. All structures, whether you are operating as a for-profit or a non-profit, as long as you are satisfying the definition of a foreign contribution coming from a foreign source, you would be obliged to be governed under the Foreign Contribution Act. Having said that, in terms of the explanation to Section 2, which defines foreign contribution, any monies which are being received which require a corresponding obligation from the entity to either provide some sort of a service, or this is in terms of any particular event which was carried out, whether by the for-profit, non-profit entity, there are exemptions, and you should study those definitions very carefully before acting upon these structures that we touched upon.
Okay, so Shalaka wants to know, normally how much time is taken for registration of FCRA after application online?
Shalaka, this is a very tough question to address in the current situation. Just to give a little bit of background, in view of the fact that there were a lot of employments of various joint secretaries as well as the officials of the MHA, which were terminated owing to oversights on their part and the general demeanor of the current government, there has been a severe delay that we've been noticing. Normally, the registrations should be obtained within a statutory period of 6 months. However, we have seen cases where the registrations have taken up to a year or even more before being granted. This is all assuming that you have all proper documents as well as submission of queries which they raise from time to time.
Well, thank you. Amit also wants to know whether a director who is not drawing salary, whether he is covered under Lokpal Act.
The director continues to be covered under the Lokpal Act even if he is being resigned, as long as the foreign contribution money is continuing to be utilized.
Okay, our next question is from Sana. Is 3 years of operation mandatory for application under Section 80G of income tax as well?
Sana, this is only a suggested guideline for FCRA purposes. For 80G, there is no such requirement. You can theoretically apply for 80G as soon as you have your structure created, which means you are formally registered, you have a PAN number, and you have also simultaneously applied for a registration under Section 12AA. This is the position as per law. However, we've noticed that at times the Director of Income Tax Exemptions requires that you do have your 12AA registration in place before accepting the 80G application. So this is something you just need to see clarity depending on which state or which city you're located and what guidelines the tax authorities have in place for this.
Our next question is whether advisory council members who are not directors of a Section 25 company covered by Lokpal Act.
Again, Amit, you need to go back to the definition. Other officers is something which has been covered. Depending on the nature of the consultant or advisors, it would be covered under the other officers clause of that definition.
Next question by Amit is whether insurance premium which has been paid from FCRA bank account can be taken as a refund of premium in the same FCRA bank account.
Amit, again, this needs to be determined based on the reasons for seeking a refund. If this is in a situation where your check has been dishonored or a check has been cancelled, then yes, you could potentially get a refund in the same FCRA bank account. If this is for circumstances otherwise than that, then I suggest you need to give a little more clarity on the reasons, and then only we would be in a position to address this.
Our next question is that how does an organization follow up on the renewal status of FCRA registration? Because the website keeps saying your application has been received and their expiry is nearing and they want to know how to follow up.
This has been a question which we've been getting virtually on a day-to-day basis from our clients located in different parts of the country. Unfortunately, the website, even though it does endeavor to provide you a real-time status, but we've noticed that the actual facts are not always uploaded correctly on the website. We suggest that you'll have to either engage the services of somebody who can personally follow up in New Delhi by visiting, or else you have the ability to phone them, write them an email, or possibly request any of the other office bearers who are located in New Delhi to have some sort of clarity. We strongly advise that you keep a very strong track virtually on an every alternate or every weekly basis, because the window which the FCRA opens up to address those queries is at time very limited, and you do not want to be in a situation where you are not able to address that question within those timelines.
Well, thanks for that. Bhupendra here wants to know whether they should maintain the ledger of group in their books of accounts.
Bhupendra, it is absolutely strongly advised that you do maintain this in order to make sure that you have a distinction between the expenses of administrative nature. I'm sure you are aware that there is an internal guideline that you cannot spend more than 50% of your total expenses during the year towards admin expenses. In order to have this track, you are obliged to maintain the prescribed records.
Dipali wants to know that they are registered as 501c in the US and now they intend to have an Indian entity, and she wants to know which is the best option as an NGO, whether a trust, LLP or an LLC.
Dipali, again, this is a question which is very fact specific to the needs of your organization, to what level you would have foreign control, to what extent the 501c needs to actually exercise influence and control over the Indian entity. If that is so, then obviously you would need to go in for an entity like a Section 8. In situations where you do not want any sort of a direct link between a 501c and the Indian entity, you could potentially explore the concepts of a trust and society, the citizenship and the residential status of the trustees or the society before going ahead and applying for the entity, because we've noticed there are a lot of restrictions both under the income tax, the Trust Act, as well as the SGA rules whenever there is any entity which has foreign trustees or as members who are of foreign origin.
Another question from Dipali is that in a situation where FCRA and prior permission are not being granted, what is the best option for firms to bring in or use foreign contribution?
Dipali, this is a question which I don't think I would be in a position to address very clearly. You are only required to comply with the laws of the land unless you do get your requisite permission under the Foreign Contribution Act. You would not be allowed legally to bring in any monies. Having said that, you should explore the exceptions to the definition of Section 2, which is prescribed under the 3 explanations in the FCRA Act. In case you are covered by any of the exceptions, you could potentially bring in monies through that route.
Bhupender wants to know whether they can issue ATG receipts to the funder who has given them grants towards CSR projects.
Bhupender, again, it needs to be determined in what manner these grants have been given. Normally, any association or any company which has been given benefit is not obliged in separate manner to have this ATG benefit. You have to understand what is the nature of the monies which have been given. For you, you can obviously go ahead and issue a receipt which has the ATG approved number mentioned on it.
We are going to take one last question owing to the time limitations from Sadiq. Whether they can keep the surplus in fixed deposits in the bank.
Sadiq, yes, I'm sure, and my apologies if this was not explicitly touched on in our slide when we talked about the options available. Fixed deposits is something which is definitely permitted under Section 13(5) of the income, rather 11(5) of the Income Tax Act, which allows you to maintain the surplus under fixed deposits.
Well, thank you, Sohail. Thank you everyone for attending the webinar. We would be circulating the presentation to everyone and also uploading the recording of today's webinar online. We are going to keep the chat box open for a while so that you can put in your queries, and we will be getting back to you by next week.
Before we end, we'd also like to extend our special thanks to the Thomson Reuters Foundation for connecting with us to have this webinar and to allow this opportunity for us to share some key insights in a lot of areas which are not something most people pay a lot of attention to. We strongly suggest and recommend that if there are any queries, you should reach out either directly to us or the various pro bono initiatives which have been taken by Thomson Reuters Foundation. And we wish you all the best for the various noble objects for which you have been carrying forward your activities. Thank you and hope you have a great day.